Hi, it's Jordan. Most people don't fail at investing because they choose the wrong assets. They fail because they follow the wrong order. And the wrong order keeps people stuck for decades. Nobody talks about this because it sounds boring. But this is the exact sequence behind quiet millionaires. There are two types of people. People who chase investments. And people who build wealth systems. Only one group wins long-term. The biggest mistake beginners make is starting with questions like, what stock should I buy? What crypto will explode? How do I flip property? That is step 5 thinking at step 1. And it destroys compounding. This is called the wealth sequence. Miss the sequence and you stay stuck. Follow the sequence and momentum becomes inevitable. Let's break this down properly. Stage 1 is earn power. Before investing more, earn more. Because investing small amounts creates patience. Investing large amounts creates outcomes. Investing large amounts consistently changes your life. High performers focus on increasing earning power first. Valuable skills. AI leverage. Scalable income. Business exposure. Most people focus on saving money. High performers focus on becoming more valuable. Income speed sets wealth speed. That means learning skills that the market rewards. Understanding sales. Understanding technology. Understanding distribution. Understanding how businesses make money. When income grows, investing stops feeling slow. Momentum appears. Stage 2 is friction removal. Compounding hates friction. High-interest debt silently cancels progress. Lifestyle inflation traps income growth. Random spending destroys investing consistency. Most people try to invest while leaking money everywhere. That never works. Wealth is not only about what you earn, it is about what you keep available for compounding. Removing friction means paying off expensive debt, avoiding status spending, keeping fixed costs controlled, designing a financial life that supports investing. Leaks destroy compounding. Stage 3 is the stability layer. This is the most underrated wealth move, the Freedom Fund. 3 to 6 months of living expenses. Most people think this is about safety. It is not. It is about leverage. When you have stability, decisions improve. You can leave bad opportunities. You can wait for good ones. You can take intelligent risks. Security creates strategic courage. This is where many people feel the first shift. Stress drops. Clarity increases. Long-term thinking becomes easier. Stage 4 is the core compounding engine. This is where wealth actually starts. Not exciting, not viral, but extremely powerful. Owning productive assets that compound in the background. Broad market investing, automated investing, consistent allocation, long-time horizons. This is where most millionaires are quietly created. Not from timing, not from prediction, from consistency. The goal here is simple. Build a system that invests even when motivation disappears. Automation beats willpower. Now this is where things change. Because this is where most people finally start, while high performers move forward. Stage 5 is acceleration assets. This is where wealth speeds up. Real estate, businesses, equity ownership, assets you can influence. There are two main paths here. Capital gain investors focus on buying, improving, selling. Cash flow investors focus on assets that pay monthly. Both work, but clarity matters more than strategy. Control compounds faster than speculation. Assets you influence create asymmetric outcomes. That is why business and real estate appear so often in wealthy portfolios. Stage 6 is elite leverage. At the highest level, money is no longer the advantage. Access is. deal flow, network, skill leverage, partnerships, reputation. Opportunities begin to appear that are invisible to most people. Private deals, equity swaps, strategic partnerships, early access opportunities. This is where wealth expands exponentially. But this stage only works because of the previous stages. Sequence creates eligibility. This is the part nobody explains. Wealth is not about finding one big opportunity. It is about becoming the person opportunities appear for. That is leverage. Now here is the deeper truth. The biggest risk in investing is not market crashes. It is strategy switching. Jumping trends resets compounding. Distraction delays wealth. Complexity creates inconsistency. High performers follow a simple rule. Large capital only goes into things that are deeply understood. Curiosity is encouraged. But consistency builds wealth. The wealth sequence is not complicated. But it is rare because it requires patience and discipline. And discipline is uncomfortable in a world built on speed. Wealth is rarely one big decision. It is a sequence repeated for years. Increase income, remove friction, build stability, own productive assets, use leverage, repeat, over and over. Simple, but extremely rare. Sequence creates wealth. Strategy only accelerates it. If you found this valuable, hit the thumbs up so more people can discover this message. Subscribe if you're serious about increasing your income, building real wealth systems, and thinking like high performers. See you in the next video.